Hello investors. The month of Feb has been a bit of a challenging month actually. What we call a typical whipsaw month where the market and we have closed slightly negative. Why I call it a whipsaw month is that very early in the month we broke out about above 11,000 on the Nifty and it seemed like we were really taking off. The market disappointed, went below 9.6. Again it seemed like the breakdown has happened, but again it reversed up. So net we closed mildly negative. However, the big takeaway for this month has been that in spite of some very big bad news, the market has refused to go down. In fact, has shown immense resilience. We've had a massive issue on the border between India and Pakistan, and such events generally cause investors to panic, especially the global investors. Do not like wars or any such uncertainty. But in spite of all that, what we notice is that the market really didn't give away. In fact, post the event, the market has shown much more strength and resilience. So markets that don't go down on bad news is, I think, a very big positive. And that is another what we call layering on our belief that the markets will surprise on the upside. What we really see is that in this phase, when people have been very, very negative, the narrative has been, on politics, on border, war, etc. The FIs have actually gone in and plowed in a record number. In fact, they've almost invested about $2 billion in the month of Feb. And that also has come in the last 10 days when your whole border issue was at its peak. So as a thought process, you think that, there is a problem, FIs will sell and what will happen? In fact, the contrary has happened. They have almost invested 14,000 crores in the month of Feb, and that also backloaded. And this number is the largest we've seen in almost 2 years. The last time we saw such a big FI number was in March 2017. That's almost 2 years. After 2 years, we are seeing such a big FI number in a single month. On the flip side, we find that domestics have actually got a sell figure of around 500 to 600 crores. And this is again the largest sell figure we've had since March 2017. So what really happened last time after March 2017 when we saw similar patterns in flows? In March 2017, the Nifty was just under 9,000. A year later, Nifty had reached up to 11,000. So a year from then, we almost had a 25% move on the index. Again, I'm not predicting, but what I'm trying to say is that in India, the sentiment or the narrative is too bogged down by elections. Everyone's waiting for clarity after elections comes. I have a feeling that the markets will surprise most people. And if you wait for clarity, you will have to pay a heavy price, because then the markets are not going to be here. They are going to be at a very, very different level. So going ahead, I think that this FII flows that you're seeing, this whole emerging market rally is, I think, going to be the big trigger for the markets. Domestic investors may be skittish, may be fearful, and thanks to all the media and the hype, and it's pretty disgusting actually. But however, that seems to be dominating sentiment. We have absolute clarity, and we think that going ahead, we are not going to be bogged down. We are sitting in a little bit of cash, which I think we'll deploy. I'm going to actually move your portfolio into almost fully invested very soon, because I am actually optimistic of the oncoming few months. The question is that in which space we should be in. Initially, you will see a large small cap to mid cap kind of rally. The reason is that these stocks have fallen 70, 80, 90%. However, I feel that this will be a short term, a oversold pullback, and we really don't think that they have the makings of a long term trend. We will continue to be in the spaces we are, which is in the case of leaders, and once the market stabilizes or the rally matures, we feel that they will break out to new highs and be the wealth creators going ahead. So all in all, fingers crossed. I know I am sounding bullish at a time where everyone is confused, waiting for elections, nervous, etc., etc. But I guess that's my job, to ride the trend and control risk. Yes, we all go wrong, we can go wrong, but it's important to also be able to control risk. And we have demonstrated that in the last 1 year when we've had most taxing of times. So on that note, I'd like to say thank you very much.